Welcome to Money Secrets with Bill and Mike.
I'm Bill Alexander.
And I'm Mike Tove. Bill, you know, I have had many clients come into my office. Of course, I'm in the insurance and financial services industry, and they are, let's say, confused about just what an insurance company's safety and security and so forth are.
Well, insurance is important to so many families as it is a foundation of asset protection, of avoiding risk. Insurance is important to every family. Now, people get different kinds of insurance, but insurance is so important to every family, and we're lucky to have a true expert on
Yes, we do. Ray Kathawa actually from the Detroit area has come down to visit us, and he is one of the founding members of the Independent Excellence Group, which is a very elite think tank organization that serves the insurance and financial industry.
Well, Mike, when we come back, we'll really have to tell folks about Ray because he's a very special expert.
Absolutely. Stay tuned. We'll be right back. Welcome back. So, Ray, I want to introduce you. You and I have known each other for a while. And you are one of the founding members of Independent Excellence Group. Just tell us a little bit about that organization and what it does and how all that comes together.
Well, first of all, thanks for having me on the Money Secret Show. I really appreciate that. A beautiful state that you have here. The Independent Excellence Group is a think tank of financial service professionals that we bring together from around the country to really search out and seek out ways to better serve our clients.
And that's primarily in the insurance, but there's more than that. I mean, it's
Ray,
anything with assets and preservation.
Well, Ray, tell us who's a part of the Independence Excellence Group.
So as a group, again, it's a national group. We have members from all different parts of the country, of all different types of businesses and practices that deal primarily with retirement planning and financial planning. Each member brings a specific, I would say, a specific level of expertise or a different level of expertise, and the idea is to collaborate, to share ideas, to really bring the best out for everybody's clients.
Well, Ray, I've always been told that the Independence Excellence Group is hard to get into. You have to have a very successful practice to be involved in that group.
You have to have a very successful practice, but we also focus, we also have a very high ethical standard. You know, there's a lot of bad actors out there. There's a lot of bad element, as we've seen over the years in the financial services industry. So we're very selective about who can be part of that group because we want to ensure that we're bringing the highest level of service and ethics to the clients that we serve. Yeah,
I mean, I've been a member for a little while, at least a few years. And it's been quite an eye-opening experience to just have a chance to meet not just the members, but of course we get to meet some very special guests and so forth. One of the things I wanted to talk about today, I get so many people come into the office that are confused about the insurance industry as an industry, and I hear all kinds of interesting, if not sometimes strange ideas that range from is it safe all the way to the industry is just shy of trying to cheat people. And of course we know that's not true. But you have some experience in this, and let's talk about just how safe the insurance industry really is. What are the provisions in place to protect a person's assets?
So going back about 10 years ago, when I got involved in this business, it was right around the time when the last financial crisis, the meltdown, the Great Recession began, and I remember being rather new to this industry, wondering what's going on here. And I also recall actually calling a number of the insurance carriers that we were dealing with at the time and asking them, is everything okay? And they thought I was rather crazy because I was asking them that question. Well, it was right in the midst of the whole AIG and American General debacle of what was going on, and I just wasn't sure. Nobody was really sure what was going on, and the answer was, yes, we are okay. Well, hard to believe what somebody over the phone is telling you from a different insurance company, and so you start doing some checking. What does okay really mean? What does that really mean? How are they regulated? And contrary to many people's belief, the insurance industry is very highly regulated. It's regulated at the state level. There are fundamental requirements that every insurance carrier must maintain, reserving requirements in the event that policyholders need their monies.
Right. So let's back up. Reserving requirements, in other words, 100% reserves, but let's describe what that really means. So if I put $100,000 into some kind of an insurance contract, what does 100% reserves minimum requirement actually mean?
Well, what that means is the said carrier has to have that money in reserve and then some.
Right.
To be able to pay the claims out with whatever types of insurance that we're talking about. We might be talking about life insurance, maybe talking about annuities. It really depends on what you're talking about, but the carriers have to have the ability to make good on those claims. And the departments of insurance, state by state, regulate those insurance companies and audit them on an annual basis to ensure that.
So,
well, how does that work as an industry when you have a catastrophe? And so let's just talk for a moment about property and casualty insurance. North Carolina is a state where we do have hurricanes that blow through. In fact, just within the past year, we had Hurricane Matthew that basically took out a swath of the state, really, in terms of the flooding, and it really caused devastation to a number of communities. Well, obviously, the property and casualty insurance industry was on the hook for that. So how does the industry cope with a catastrophe like that? I think that might give our listeners and audience some sense of how safe this type of industry is.
Well, insurance at its core is really pooled risk. That's really what it is. So it's terrible, the catastrophe you had here in the state, but in that example, in other states that catastrophe did not happen. So said insurance carrier is collecting premiums from everywhere, right? Pooling the premium dollars so that they can make good on the claims when they happen, where they happen. So they're able to do that. Now, barring catastrophes like hurricanes happening in every state at the same exact time, insurance carriers are able to make good on those claims because the risk is pooled.
Mm-hmm. And is it pooled the same way for other types of policies, like life insurance?
Similarly.
We're going to take a short break, and we'll be back, and I want to explore a little bit more of this. Stay tuned. Welcome back. Ray, before the break, you were telling us about how these insurance companies are regulated, and you said that it was by the level of the states. Now, insurance companies, are they just one state, or are they in all states, or some of them?
So some insurance companies operate in every state. Other insurance companies only operate in certain states. Okay.
So for a company that was like in every single state, and of course, the District of Columbia is different. It's its own state for insurance. If these companies are being audited, as it were, by departments of insurance once a year, I do a quick math, that's 51 audits a year for a company that's in all states. There's only 52 weeks in the year. That's once a week with a week off for Christmas, right? So what is an insurance audit more or less like? I mean, what do? They don't just say, hey, show up and sign on the dotted line. They actually look, don't they?
A broader question might be, what do the state insurance commissioners do?
Well, what they're looking for, to really boil it down, they're looking to regulate the carrier's activities not just from a financial standpoint, but from a product standpoint, a marketing standpoint. Every product that is sold in any given state has to be approved by said state Department of Insurance. But really, to bring it down to a simple level, the insurance commissioners are seeking to ensure that the carriers are doing what they need to be doing from a financial standpoint and are managing the company properly to be able to make good on the promises that they're making to their policyholders.
So in essence, the commissioners or the departments of insurance in the separate states they're regulating the companies that are doing business in their state, and their first mode is to make sure that the companies can pay the claims if there's a loss.
Correct.
Right. So in other words, for the benefit of the people who are purchasing whatever products the companies are offering, their safety, their security, their assurance, right?
Yes.
And if I heard you correctly, they also look at every product, every definition, to make sure that the policies that are being offered in their state is fair and that it's meaningful to those folks who purchase those policies.
That is correct. They are doing that.
Because I know that in my own experience, and you know this, that I have to, first of all, I have to be licensed, then I have to be appointed, and then in many cases I have to go through individual state-approved product training, product by product by product, and literally state by state by state. So if, for example, if I have an annuity product that I am authorized to sell in the state of North Carolina, but somebody calls me up from Massachusetts or Connecticut or somewhere else and they say, can you sell me this product because I heard about it, I have to actually go through the product training and the state licensing for that state. So the regulation is very tight.
It is. And again, what they're really looking to achieve is protection for the policyholder, to ensure that,
right,
again, if the insurance company is making a certain type of promise in whatever type of policy that they're issuing, that they can deliver on that promise.
Right. The other thing is that I happen to know that you're also affiliated with a national marketing organization that is involved with recruiting and bringing and authorizing insurance agents to have access to different products. What are some of the gauntlets that a national marketing organization looks at for a prospective insurance agent before they just throw them into the mix, or if anything?
Well, there's a great deal of vetting that goes on these days behind the scenes in the insurance industry for advisors and agents like yourselves that are out there meeting with the consumer and talking with them about the different financial products that are available. There are background checks that go in to effect every time you or Bill wants to go out and become, as you said, appointed with a carrier. There are things that the insurance companies are looking for to ensure that they're not just allowing anybody, especially people and individuals that have had negative items on their backgrounds, get involved into the financial services industry.
So the whole thing is, I guess what we're getting at and what I want everybody to understand is the level of checking, of scrutiny that goes into the industry, because that adds to safety. It's not just that the companies have a safety factor, but that every player, every step in the process has redundancy.
Well, I mean, I guess I'd like to boil this down a little bit further, because every family has options in terms of what they do with their money. You know, there's certainly they can go to a broker and invest in mutual funds or stocks or bonds or those kind of investments. They can invest in real estate. They can take their money to the bank and invest in CDs and money market. But you know, insurance is also a piece of what every family needs to look at. So the broad question for you, Ray, as our expert, is what kind of insurance should people be looking at as it relates to their needs?
Well, the easy answer is it depends on
Well,
their needs.
Okay, I'm a lawyer, I know that answer.
But so let's think of it this way: you have an automobile, you have car insurance, you have a home, you have home insurance, or at least you should. Many of the insurances in the financial services industry, like life insurance and annuities, people don't really know this, but an annuity, a fixed annuity, is actually a form of insurance. It's an insurance policy with a carrier. Most of those types of insurances are not required. You don't have to have them. Like in most states, you have to have car insurance and homeowners insurance for the bank. But your question was, what would somebody want to have? Many of the clients that we see are at the place in their life, they're at the end of the finish line. They went to school, they did well, they graduated, they got a job, they maybe had a family, and they kind of ran the race of life, got to the end and crossed the finish line, and hopefully they're still around to enjoy the next part of their life. But oftentimes some of those optional insurances that they could have had were not really picked up along the way.
We'll be right back, and we'll finish this up. And we're back. So Ray, right before the break, you were talking about how insurance is actually an important component in a family's bigger picture.
Yes, families insure their homes, like we talked about. They insure their cars. In some cases, they insure their lives. One would wonder, why wouldn't they want to insure other things that matter in retirement, like income? And there are ways to insure your income.
Yeah, and of course, income is kind of on the important side. I mean, try getting along without it, right?
Well, it is so important to everyone, and obviously with most seniors, their income is relatively limited. Last or a show not long ago, we talked about how your Social Security was a part of your financial planning as it related to that, and elections and the like. But obviously insurance is something that can be utilized as well.
Well, of course, the other piece to this is that we really do keep forgetting that life expectancies are getting longer and longer and longer and longer, and that when folks retire, except for certain permanent forms of income such as Social Security or pensions, they're living off of fixed income. They're living off of what they did yesterday. And as those values are not as big as they may have expected when they first started because of the market crashes of 2000, 2001, 2002, 2008, because of a whole host of other things, they're asking a smaller amount of money to last a longer period of time. That doesn't strike me as a very favorable direction. So, and then of course, if we have another crash, I mean, there's an awful lot of people that say, we're not done. We may have another major correction in the future.
So nobody really knows what's going to happen, but it is important. We see it more and more today, more now than ever before. It is important to plan for those what-ifs in life, because it's a lot harder when you're in retirement to have a do-over.
Yeah.
For sure, and I think that's a fear of so many of our seniors, and clearly our money secret for today is one that insurance is a safe bet, if you will. In other words, it is something that families can use and be able to sleep at night, not worrying about what happens in the stock market or what happens in terms of the weather. Insurance is an extremely important part for every family, and that it's a safe part.
Yeah, and I think the safety thing, especially in the light of the last 17 years of extreme market volatility, I think that people are starting to wake up to the idea that safety really is important. Back in the 80s and the early 90s, when we didn't see any catastrophic failures of the investment system, when everything was just kind of moving up as a steady eddy, and no matter what you had, you'd buy it, and a few years later it was great. We're not in those days anymore. No,
we're not. In fact, we're at a point where there's so many different things that can happen globally, right? Everything is global now. All economies are global, that something on the other side of the world could happen to trigger something negative here in our country.
Right. And so protection, I think, is a key. To me, that's the secret, is that you have to look at ways of protecting what you spent a lifetime building.
Absolutely.
So we'll be right back and put a wrap on it, and stay tuned. Welcome back. So, Ray, thank you for coming, and this is going to be part one of a three-part episode, I believe.
Yeah, we can't let you get away.
No.
When we have a really good expert with us, we try to use you and abuse you as much as we can. So we appreciate your willingness to do several shows for us.
Well, you're welcome. Thank you.
But one of the things that we want to do on the second episode is I want to focus in on some of these topics. So we'll pick that up next week. Until then, I'm Mike Tove with AIN Services. I do insurance and financial planning, asset protection, and so forth. We can be reached at 800-363-2296 or on the web at www.ain-services.com.
And I'm Bill Alexander, founder of W.G. Alexander and Associates. We are attorneys who focus on estate planning, elder law, and asset protection. And I would ask you to join me on Saturday mornings at 11 o'clock on WPTF for my radio show, Asset Protection Today.
And thank you for watching. Tune in next week when we come back with Ray Kathawa. Take care.
See you then.